Once the poster boy of startups in India, Byjus is finding itself in the hot water. The Enforcement Directorate on Saturday searched 3 premises in Bengaluru linked to the company over allegations of foreign exchange law violations. Searches were conducted at Think and Learn Private Limited, the company that owns Byjus. Now, ED says that the search yielded various incriminating documents that incriminate Byjus, and also some digital data was seized. Now, Byjus has received foreign direct investment of nearly 28,000 crore between 2011, the ED says, adding that the firm remitted 9,754 crores to various foreign jurisdictions during the same period in the name of overseas direct investment. Now, Byju has denied any wrongdoing. Remember, India's most valuable startup, Byju, a year ago celebrated $48 billion valuation and expected equity raising through a SPAC listing. But as per the latest report, it only managed to raise $700 million at $22 billion valuation. Now, the Edtech major has posted losses of over 4,564 crore for the financial year ending March of 2021. The revenue from operating mainly came from selling Edtech products, which fell 9.5% in financial year 21. The company delayed the filing of its earnings in financial year 21 and also in 2022, which was delayed and was subsequently supposed to be disclosed earlier this year. Hasn't happened so far. It's not looking very good for Byjus at this point in time. We are going to be discussing the Byju story, the story of startup ecosystem in India, and how and what is affecting the overall startup economy. With me at this point in time, my colleague Rakesh Khar joining us here in the studio. Rakesh, coming to you first, what exactly happened at Byjus?
Hi, thank you, Shweta. I think there seems to be no end to the winter of discontent at Byjus. But let's remember that, it's not only Byjus, it's just the face of the discontent and the problems in the Indian startup system. While as it's a phenomenal story when it comes to the promise that the startup ecosystem holds in India, and the world is talking about it, but there are some systemic problems, if one can use that phrase. So time for introspection, deep introspection at Byjus and across the startup ecosystem, especially in the edutech space. So the latest instance adds to the litany of woes that Byjus has gone through, from human resource element to lack of funding to lack of clarity on its filing papers with the regulatory authorities, and now the ED charges against them, which they have denied. But truth be told, that there are challenges, and if we just say it's a problem between Byjus and the regulatory authorities, that's just the tip of the iceberg. To my mind, the entire ecosystem in India needs a re-examination from all relevant stakeholders. Let me just put it in context. We had a brilliant year in 2021, and 2022 again the story got slightly disconcerted. We had maximum number of unicorns in 2021, and it was the toast of the world. Second best number of unicorns to US, and 2022 the funding started coming down. In one sentence, I'll give you more details about what the problem to my mind is. And I've been speaking to a whole sort of experts in this space who were actual original founders of the startup thought process in India way back in 90s, and who've been watching this now. The problem is that there's an idea, good, bad, ugly. There's an investor. Then there is evaluation and the growth push. Finally, there's P&L.
Right.
Who is the final custodian of this entire value system? We have no clarity on that. So what we have gone for essentially is growth and valuations. What we call price economics, price unit economics, or positive unit economics. That means, are you making money for the acquisition that you're doing? That has gone for a toss.
Okay.
Now, the guy who's got a brilliant idea has got an investor. The investor is making money by evaluating and showing growth as a parameter. What is growth? Essentially, it's volumes. So when volumes don't translate into positive price economics, that's where the challenge is.
Okay.
And further, to compound the entire ecosystem is the push for unicorns. It's a number ultimately, Shweta. We are happy saying that we have X number of unicorns next to US. We are giving China sleepless nights. But if those unicorns are not profitable, so the key question, the sum total of this entire challenge today is who is going to guarantee profitability? Who is responsible for P&L? I mean, the investor comes in, invests money into an idea, and then ejects at a level where he's making some money. But finally, who's holding the can?
Okay.
So coming back to Byju specifically, I think it's still one of the most valuable companies we have. And but did it take the right route in terms of basic management, in running a successful company? So that again is a key challenge. And there have been a whole lot of allegations being made against startups in this country. All of them are not right. Like, them siphoning off money, stripping off assets, and spending money on themselves, building large houses, buying, mini aircrafts and stuff like that. So there is need for all these four people I mentioned: the idea, the investor, a clutch of them in case of Byjus.
Right.
Some of the best known marquee names are there in Byjus. So are they looking at it? I would like to know how they're looking at it.
Absolutely.
And what is the redressal they're, so to say, prescribing.
Because they continue to fund Byjus.
Absolutely, as I said, in terms of the value proposition, it's a very good idea. But overall, positive price economics is something that is the key takeaway. And just to tell you, there is course correction already happening. I had met Amitabh Kant. He's now with G20 Sherpa, but before that he was, at Niti Aayog and, so to say, mentoring startups. He also did admit that this undue push for unicorns is leading us probably not the right way. But I would be happy to hear out our experts, probably who would have joined now.
Okay. Joining us at this point in time, Sreedhar Prasad, who's a strategic advisor, also with us, Srinath Sridharan, independent markets commentator. Gentlemen, appreciate you taking time out. I want to come to you first, Sreedhar. Do you agree with the analogy that startups, and in this case, particularly Byjus, and startup ecosystem overall is pushing for growth and valuation over bottom line and profit?
So the statement is fair. I think that's how it has been built, right? And I would still believe that we are a young startup country. We are just 15 years old or 10 years old. So most of the businesses we know, where we are also consumers, were built on a scale model, right? And that's how usually it's built. And then you refine and reach a profitable steady state. However, just like a colleague mentioned, from the idea to the investor to X and Y, possibly what is missing with refinement is the business model. You need to have clarity on the business model, whether you're able to achieve it today, achieve it tomorrow, achieve it the day after X amount of scale, that's still fair. But what is the business model which is being backed has to have conviction and the kind of clarity. But unfortunately, many of the time what is being backed is the human being and the idea, right? And then you try to figure out the business model after Series B, Series C in some scenarios. That could lead to this negative publicity, negative acceptance of the Indian startup ecosystem as a whole. On you guys have grown, crazy amount of customers, crazy amount of transactions, but what's the business model, right? So I think that is where today possibly people are focusing on. Though media is calling it focus on profitability, I would presume that it is actually focused on what is the fundamental business model, right? Does it generate money, or you're giving money to buy service? So I think that is where we are from a perspective of many of the instances which has come up, unfortunately, in the past 12 months, where there is far more scrutiny, far more visibility, far more reporting issues coming up from the country. And I think it's a good time to recalibrate this even for the unicorns, the Soonicorns and the young startup founders who are setting up businesses, to have a very clear conviction on the business model. And then obviously the economic model and the unit economics, which eventually follows that.
Okay. Srinath, one of the questions that comes to my mind is that you have big investors backing many of these companies, including Byjus. So if there was no business model or a not so sustainable business model, they would see through it.
See, I mean, one of the fundamental challenges in a VUCA world that we live in is India has one of the highest volumes of consumers or potential consumption possible. I think to me, it's a myth that we are always chasing that elusive middle class. I mean, middle class is so scattered as a range from all the way from lower middle class to upper middle class. If you look at it, there are only 10 crore Indians who are actually consuming almost most of the products that each of these unicorns are chasing. And when we say startups, let's be very mindful that we're talking about digitally led startups, not necessarily entrepreneurship as a startup. And we have always been celebrating unicorns. We have kind of pushed out what we should be celebrating, early failures to learn from, what are the business models that kind of didn't work. And we have not done that. So it is, to me, when it's a musical chair, the investors, let's not beat ourselves. The investors also, the private investors, including the large investors, have to take some flack for this. Of they have exacerbated this entire behavior of sometimes even the founders behaving crazily, or their companies. They have pushed them for higher valuations and not bothered about actual business model that they want to pivot to. What is where are the large monies globally? If you look at the last 30 years, the one of the large ones which stands out is Amazon, including in India, Amazon India. What have they chased? They have put in large sums of equity capital to change consumer behavior and consumer habits. Over a point in time, as consumers get comfortable with technology and how they adapt and how they use those ideas into execution. So it is fair to say that they would lose money in the first couple of years. But how many of them actually showcase a model where they say, I'm going to lose money for 4 to 5 years? Everybody would say, I'm going to make some money, I'm going to use. We keep on changing the metrics. First, we say consumer engagement, then we say consumer frequency of visit to our website, number of transactions that happen, the average ticket size. So somewhere there has to be a goalpost, and which is why I think the private investors who are ready to take, it's a risk-based capital. If they are ready to take this risk, saying India is a long shot, long-term market, I don't mind losing a couple of $1 billion in India in the initial years to learn it. I mean, it's a price that they're willing to pay, and we should not be complaining. But let's face it, all of us have to take flag saying we still keep on putting pressure on unicorn valuations. Media celebrates it, every investor celebrates it, every B school celebrates unicorns. But hey, what about those other 8,000 companies who are doing fairly well in terms of the entrepreneurial journey? And we never seem to celebrate that. And that's, I think, it's a whole ecosystem that where we all have to take a flag. And somewhere, I think we must also speak about governance of startups, the conflict of interest, how do the private investors, as much as scrutiny that typically the public listed entities go through, can we actually get some of those scrutiny for even startups or unicorns, because large sums of monies are involved? And I think that's worth a conversation as well.
Okay. Do you agree with Srinath there that partly investors are also to be blamed for the fact that they want higher valuation, that they are the ones inflating and making big, huge promises, pumping in money, but not really, holding on to their stake in a company?
Shweta, absolutely. I think, to my mind, everybody is to be blamed. But I want to ask our esteemed panelists one fundamental question, first of all. Ultimately, whose responsibility is P&L? I think that's where we have some confusion. If it's a listed company in India, you know the management or the board is responsible. In case of these, so-called celebrated, startups, some of them have great ideas. Some of them have possibly great business models. We have a Zerodha and a Zoho also as great classic case studies, which are success stories. But for many of them, for most of them, I think this question needs to be asked. Who would you put the final, whose neck is on the chopper if it doesn't work? Because that should bring in about a lot of clarity to my mind.
Okay. Sreedhar?
So I think there's no change in that. Every company is a company in India or abroad. Who's in the neck is the board and the founder or CEO. There's no change to that at all, right? I mean, I don't think we should even give a separate definition by virtue of it being a digital startup. The ethos of the company.
The question here is that most of these startups have founders and investors as the board. There's no independent director. So that's why I'm asking, where do you draw the line between the the idea guy, the investor, and the board, and the accountability finally? Where does it rest?
So what you're saying is right. The importance of independent directors in startups is a concern which is coming up. And then the board and the founder should have the neck on the line, right? And the conflict of interest of the board being majority financial investors, yes, need to be balanced with just like any other listed company in the country, where you need to have people who can ask questions openly and can add value beyond just the digital economy. So your point bang on, there should not be any difference. But to be ready for it, yes, startups starting with unicorns and unicorns need to have that kind of a board where there is constant value add and not just pressure on growth and valuation.
Srinath, I agree with you. I mean, media has also to play a role. I think we've been too much, so to say, in a celebratory mode, bringing in these numbers of unicorns and unicorns, and probably getting a little bit of sweat off the ground. But that apart, my fundamental question is, who is ultimately responsible? Because if we don't find that complete accountability, otherwise, to my mind, the investor makes his money exiting, and he's happy with it. The ideas guy gets a new life, he's happy with it. The customer gets good, bad, ugly service, he's happy, unhappy with it. What happens to the P&L? What about positive price economics, which I keep referring to? Who is responsible for that?
It's very simple. The moment we treat every unicorn or every startup beyond a certain threshold of investments like a listed entity, there are two aspects to governance, right? One is the board of directors is ultimately accountable for all governance, but every single executive decision or accountability to business plans and promises is that of the CEO. The larger challenge is the founders, CEOs become the key man risk themselves. Will the private investor who was invested 1,000 crores or betting on that founder actually have the gumption to sack that founder if he's not delivering value? I doubt it. You might think it is possible in a listed entity, which does happen, but in the startup ecosystem, there is an inherent conflict of interest. And if you look at most of these large boards of some of these unicorns, a huge conflict of interest because those directors, independent directors, are actually advisors to some of those PE or family offices themselves. While by law or by regulation, they might tick all the box about independence, that more than certain amount of their financial earnings per year doesn't come from these boards, all that. But there are lots of layers of what I would think the spirit of governance gets disturbed because somebody gets paid not directly in a different route, somebody gets sweat equity through a fund and not directly through the company, which is not allowed by the law. So I think there's much more to be seen in the unicorns and much more to be seen in the listed space. And I think sooner we do that and sooner we segregate governance and management. In this case, very simple. If you're supposed to deliver profits and growth, it's that of the CEO, but then the catch is, will you fire that CEO? What next?
I mean, a bit of a, so to say, drastic idea, but do you see government intervening? So the Corporate Affairs Ministry's mandate is to bring about a very empowered board. So do you see that happening? Should it happen sooner, or it's something that interferes with the overall functionality and the independence of a company and the management to run it?
See, I think here, more from the SEBI route, I think if they bring in, let's say, some form of an advisory or a suggestive one, saying that if these companies are going towards an IPO, the previous year, 3 or 2 years, they should have demonstrated such behavior would be a far more, I think, appealing one for the startups because they want an exit route. So they would improve on their corporate behavior through those routes rather than a diktat from an MCA.
And what happens in case of an unlisted company, because it's just very opaque there. You know, taking one example of Byjus, where the problem is there's been no audit, or at least on paper, there's no track of an audit since financial year 21.
As I said, it's a love affair that the government of India, the regulators, and the startup ecosystem has. So in that sense, what we are finding out today about many of these startups is a little startling. But what happened in between? We had COVID, so there was a bit of a, so to say, retreat. But was that strategic, or was that because of COVID? How can you have a company with that kind of valuation not presenting its papers? I'm not just saying for Byjus, I'm saying most of the unlisted companies have this charge against them, and this is very serious, that there is a lack of transparency. There's lack of transparency on the board, there's lack of transparency on how the founders as CEOs operate, what are the matrices in terms of their own takeaway from the company. So that's why I keep repeatedly, and I think all our panelists are agreeing that there is time for complete recalibration of the ecosystem. And the first and the foremost thing is that let's not get too excited about the valuation business. And I would call for certain, amount of rethinking on behalf of the investors, because these investors are global investors. They are expected to do their homework pretty well. But whether they pin the founder on that, on those deliverables, or it's a shifting goal, as Srinath mentioned, what happens is that they keep shifting the goal. Either they link it to, say, volumes, then there are targets. They bring in a great brand ambassador, spend crores on that, and then try and get more, so to say, acquisitions. But cost per acquisition versus return per acquisition, that's where the challenge is.
And that's interesting, cost per acquisition, return per acquisition. And this is not just in case of Byjus. You have a lot of small, relatively smaller startups as compared to Byjus, getting in large, big celebrities, hoping to make them brand ambassadors, not getting the value back as they expected.
Quite right. See, in fact, there is a parallel thought process. Some of my own colleagues, senior editors, believe that P&L is fine, profitability is fine, but how do you build profitability if you don't have scale? Okay. Scale means volumes. You acquire a customer over a period of time, probably. I'm playing the devil's advocate myself. So right. We really don't have a perfect solution as of now. But there is some amount of, movement back from this celebration. And in terms of the ideas and the investors, that's where it begins, Shweta. If it doesn't work, and pick up all the inputs that are available today, And we don't have all the inputs available yet.
Absolutely.
So if there is no re-examination at that level, and I do forcefully say that there is need for accountability. All these big ticket investors in these companies must not just look at exiting. They have a time frame. There has to be a time frame for profitability equally. You build scale, you build growth, but don't confuse growth with profitability.
Profit, absolutely. Sreedhar, I would like you to come in at this point in time. I think interesting point there. You build scale, and there is a need to build scale. Obviously, there is a need to build a top line, but don't forget the bottom line in the long run and in the short run as well. Have a sense of proposition on when would you want to turn around the company, make it profitable.
So I'll make a sensitive comment here, and this I've been reserving for a while. I personally believe an edtech company or a health tech company in India cannot be not profitable. Okay, these are two fundamental needs where Indians spend money. We don't ask for discounts. When I go for my son's school, I don't ask for a discount. I'll pay what they ask me to pay. When I go to hospital, I'll pay whatever they ask me to pay for a surgery or an admission. These are two industries which has been built on profitability historically. Now, just with the digital layer, if you are a true value proposition provider, these two industries cannot have the fundamental business model being non-profitable. You may take a little while for the idea to germinate or idea to get visibility, I understand. But the fundamental model eventually can't be that I'll give you money to buy my service so that I'll always be having a bleed. Now, then the question will come up, are you actually an edtech company or are you a content company or are you an engagement company? Right? There are many engagement-oriented companies which are bleeding, but they show their engagement matrices. X number of visitors, Y number of minutes. That should not be the metric for an edtech company because you're providing education directly, indirectly, right? Whether it is K-12 or certifications or post-graduation or graduation, you're providing a fundamental need for the country. Whether it is, like Srinath mentioned, the huge belly of India, the middle class, they don't ask for a discount for education, right? So when you're wiring that business model, say 3 years hence, I'm touching a sector which is very core to the fabric of the nation. I cannot be not profitable. I can use the best of the celebrities to communicate, but it can't be a discounting-led model for these two sectors.
Absolutely.
Shopping,
you have a fair point. I mean, given the penetration in these two sectors, we need to really, the virtue of digital is that it will fast-track growth both in literacy as also in preventive health, and then finally India being healthy. Fair point. But so, fundamentally, let's take the edutech sector. One charge is, I'm not buying it, but I'm just putting it up for discussion, is that there's a lot of Me Too ideas. Their ideas are not original. We have Byju, and there's a series of, edutech companies coming on the table. And the other thing is changing business landscape. In COVID, there was a certain fillip to this particular business model. Post-COVID, when people have gone back to the classrooms, that fillip probably, I don't know what percentage one puts to that fillip, but that has, so to say, retreated. In that sense, going forward, what do you see is the reasonable, way out in terms of both building growth and volumes for them? We'll park profitability for a while.
Sure. So in our country, education cannot, I would say, be only digital, or reinforcing education solutions by startups cannot be only digital anymore. We need to really think about how do I become a multi-channel approach to the students, because people don't want to have the children sit in front of the computer anymore, right? They would rather want to have them educated live as well. So a multi-channel approach to whatever your product be, whether you're a technology company supporting a school, or you're a content company, or you're a alternative support company like Byjus, to really rethink post-COVID the way the world is moving for students. Can I rehash my operating model where I grab the customer's presence and intent for education, not just on the digital platform, but wherever required on other omni-channel ways, whether it is physical, whether it is digital model, and then create an ecosystem. You can't just be a product company anymore in EdTech is what I would say. You have to create an ecosystem where the customer is loyal and trusts you and is paying for the service. There are companies, I mean, just like I think Srinath mentioned, I've heard of a company called SchoolNet. They're a profitable company. They're doing very similar stuff for the government schools. They teach at the school, and when you go back home, the digital support after you reach home, the tuition, it's a profitable business. Small, maybe, I don't know what's the top line, but maybe in a couple of crores. So it's not difficult or impossible. It is where, like as you earlier said, do I focus to fine-tune my business model to my 0 to 1,000 crores and then approach scale? Or if I want real scale, then I pay for my service. I pay them for adopting my own service. So I would say, to answer your question, bang on, omni-channel, and then look at what is the real value I'm adding. Am I adding more content? And in which channel am I actually adding the real value, right? Because there are many, many Me2 apps available in India and globally. You can study whatever you want free of cost. So what is the real value I'm adding? And I can, and the last, I think you mentioned this, but we digressed away. The price discovery for EdTech is very critical, right? The companies which we know, maybe they're not the benchmark. We have to revisit what is the right price for this service digitally for the Indian consumer. People are willing to pay. That we need to understand that. We can't compare ourselves with an e-commerce company or a fintech company. These are different sectors. So in this sector, what is it that an Indian mass middle class who's earning, say, 5 lakh rupees per annum as salary, who's willing to pay for his son's education as an addition and price that accordingly, rather than going with the fundamental digital e-commerce approach that I need to offer discounts and I need to lure the customer with discounts and coupons in this sector, which I don't think is a requirement.
Srinath, what's your view on this idea that the criticism of the startup system is also that there are not too many original ideas coming in. There is a certain valuation trajectory, say in Edtech, in health tech, and there's a horde of ideas which essentially are copied from the first one or the second one, and that's also the reason that the entire sector is not looking all that great. You buy that charge, or you think that there is room for far many players even now in these two sectors?
No, I agree there. I mean, the EdTech and the health tech space, the only thing I don't agree with the previous comments on the profitability of the health sector is very, very simple. If you look at the listed entities, the health sector listed entities, they really have not churned the gravy train for their investors so far in the last 10 years, the listed hospitals and others. We all think that when we walk into a hospital, it's always packed, they charge a lot, they make tons of money. And why is it that they are not profitable? That's a question that I think the listed entities should be asked. Health and education, one point is very simple. The parents or the stakeholders always pay. One segment, which is the lower middle class, might bargain or seek some discounts, which is fine. But there are no original ideas. And unfortunately, what most of the founders forget, or even the investors forget, is getting to a unicorn or any level, let's say being half a unicorn, is like climbing a mountain. You don't get up one day and say, I'm going to climb Mount Everest tomorrow. I mean, you're going to acclimatize. There are issues that will happen when you start climbing. Sometimes you'll slip. Sometimes you'll have to stay at the base camp for 3 days to get used to it. And then you climb. And I think there's been, I think we're looking at the entire Indian scenario, unfortunately, with the same lens, saying that if this guy could climb Mount Everest, why can't everybody climb? And the other one is size and scale. I don't think it can come overnight. The India consumption story or large India volume story has been, I think, missold. We have to be very practical. Otherwise, why do you think a Unilever or a P&G or a Marico have taken so many decades to establish a profitable but consistently profitable business? I mean, they did not go out and say, I'm now serving 200 million Indians overnight. It takes time. And I think that's where pragmatism of, I think we'll have to balance the youth and the vibrancy with some wisdom coming into through the boards and the investors. But I don't see that much of it happening, because almost everybody is carried off over by this unicorn valuation story. Nobody's saying, am I actually solving for customer? The other one I think we may have to discuss that, which is very critical in this entire EdTech story, is there have been complaints, tons of complaints over the last 2 years that we have seen parents on social media complaining, saying we have been forcefully sold a plan, a 2 lakh rupee plan or a 3 lakh rupee plan for EdTech while it was financed at the back end, but they're not seeing value in it. And I think that goes to Sridhar's point of what is the actual price discovery that we do, and how do we solve for some of these consumer protection. If the same thing had happened in a fintech company, I think there have been enough flags raised by RBI, and fintechs would have seen the flag. And we have seen how RBI had stepped in for digital lending and said, clean up the mess and let's get into consumer protection. What do we do to EdTech? What do we do to health tech? Is there a standard of quality or framework where we can bring in and say, these are the minimum standards they need to meet? And I think that's a question mark as well so far.
Brilliant. I think, Shweta, the key takeaway is that one, that, there is a time frame to a business to build up. So that's the good news. And it's also evident in Byjus that the big ticket investors have not exited. So they have faith in the ecosystem. They have faith in companies which have original ideas. And to my mind, the last point probably that I would like to add here is that any business idea is worth its while, whether in the digital space or in the linear space, does it solve a problem? So India has so many vexed problems. We mentioned health and education. I think agriculture has been a laggard, unfortunately, and so
Absolutely.
much dependence. That's our other area of discussion as well. But that is one area where I see room for a lot of new original ideas. And if they really shape up and they solve a problem on the ground, profitability should not be far away. That's what I would say.